Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Brian Stutland, Chief Investment Officer at Equity Armor Investments, to discuss why owning volatility might be the trade into the end of this year. Brian, it's great to see you as always, and we've certainly seen VOLQ in particular come back in recent weeks.
It certainly has, Jill. And when you look at VOLQ and the level of volatility in the Nasdaq, obviously, just recently we saw the huge move up in the markets here. And what happened, basically, VOLQ coming down has really made it an oversold condition right now, meaning that option pricing premiums really got crushed hard downward. And now, to me, it seems like we're entering a level where buying a put or swapping out of long stock and owning a call, instead owning options to play this market, may be the right play at this level here when options have gotten considerably cheaper than they were just a few weeks ago. And the market is still moving pretty big these last few days.
Yeah, and of course, Brian, everything's predicated on what the Fed is doing with interest rates. And we had a couple of Fed speakers saying that they're going to keep rates at this level / higher, for quite some time. How do you think the market's digesting that news?
Well, certainly the last couple of days, the market hasn't liked it that much. And it looked like the Nasdaq, when we saw the 10-year Treasury go below 4%, obviously the Nasdaq made a huge move up. It seemed to break out of this sort of like head and shoulders bottoming process and broke through what technical chart is called like a neckline higher. This 11,750 level in the Nasdaq is really critical, because when the Fed Reserve chairmen and other bankers started talking, we saw that dip below that level, that 11,750 level. And now it'll be interesting to see if we can sort of hang in there, because I think this is critical. I think the market moves really big off this level here. We're either going to move significantly higher at the end of the year if the 10-year can stay below 4%, or I predict that the Nasdaq will have a significant sell-off if we start to see rates tick back up. If what the Federal Reserve is talking about, interest rates at 5%, actually comes to fruition, that's going to be detrimental for technology stocks.
Right, and certainly, of course, we'll be talking about the consumer and related stocks through the end of the year. Believe it or not, it's Thanksgiving next week, which of course means Black Friday and Cyber Monday are just around the corner. What was your take in terms of consumer earnings for the quarter? It seems as usually is the case in retail, it was the haves and the have-nots.
Yeah, it really was this time. And when you look at consumer discretionary stocks, which obviously will play a big part into that Thanksgiving, post-Thanksgiving Black Friday kind of number, the consumer discretionary stocks have not had good earnings pictures here. And a lot of those stocks have really been punished to the downside after their earnings were released. Whereas names like Walmart and other names like that, which are more the consumer staple kind of names, Coca-Cola, Pepsi, all those actually had decent earnings. Stocks moved higher after earnings. And so we continue to rotate in that area, stay more overweighted towards consumer staples, own what you need, not what you necessarily want in this kind of market environment.
Yeah, which is so interesting, Brian, because when you think about a consumer name / technology name, of course, that's Apple. And it seems as if in any environment, for the most part, it performs. You need phones. And, your notes say it has the pricing power.
Yeah, well, I mean, the key word there, you need, right? You need phones. And so they have the pricing power there. If there is a tech stock that I would want to own that's more the value-ish kind of play, and I had to make an allocation to technology, Apple is one of those names. I think when you look at other names like the semiconductors and stuff like that, they've been flying around. Again, given volatility being so low, a name like AMD or NVIDIA or AMAT, I'd rather own a call and play that to the upside, not own the long stock and be subject to all of the downside, whereas the call premium only subject to losses of that call premium. To me, that makes more sense as a way to own that type of sector and stay more heavily weighted towards Apple, in terms of actually owning something.
All right. Appreciate the insight as always, Brian. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.